Good day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday, the 24th of October, 2019. We're just after 5 p.m., so I'm very late. This is where the settlement prices came in. That doesn't help you know they're up or down, but I'll show you that in a moment. You're a little lower on the reopening. These are already Friday's prices coming in. In the energy stock market, pretty stable. However, Amazon earnings took the market down late in the session. Most of the currencies, well, they're just back and forth right here, really not doing too much of anything. So let's go to the soybean market. And as you can see for the week, and we're already at Thursday, you're down 3/4 of a cent. So we're just off this high that you made, not very much off of that, holding most of the gains that the market has put into itself recently. And the bias is up since you're over the 18-week average of closes. You have a distribution of prices going on right through here. Now, what do I mean by distribution? I mean that I'm not going to do this. Good day, all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Thursday, the 24th of October, 2019. I'm late. It's after 5 p.m., so we're already in the Friday's openings behind me. Yeah, the markets, remember, at 5 p.m. Central Time, they're reopening. That evening session goes right into Friday. These were where the settlement prices on the grains were, and that doesn't do you a lot of good, so let's see where we're at. For the week, we're down 3/4 of a cent in soybeans, 9.33 1/4. Bias is still up. We have a market that's got distribution going on. It's unable to hold big rallies, unable to get a break going of any type, just sort of hanging here. The pattern on the swing line, which is an indicator that looks to see is the market making higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend, or a higher high and low in some manner where you don't have a stepping ladder, well, it's still to the upside. Take out 927 3/4, and because you've got this pattern here with the higher high, if that were to be taken out, the potential would be to start a downtrend with lower highs, lower lows at that point. So what the bulls don't want to see is getting under that number. Now, if the market gets under it, the 18-day average is right there, and that's often what I call the line in the sand, the number the market goes to try to figure out what to do next. Need not go there because you still have the higher highs right through here. This high is higher than that one, and higher lows, but you've got divergence. You had an embedded reading. Embedded means that the two numbers that make up the slow stochastic study were at once going sideways over 80. It was lost right back here, and price, when that occurs, often makes a run to the closest below it of a major moving average or a Bollinger Band. In most cases, it's an average. Well, in this case, it's the 18. I would have thought this hit it before. A sign of strength is often the fact that when it's lost, all the market does is get back to it and it doesn't go very far. And that could be the case here. I don't know. I would have thought it would get there quicker, and it didn't. So I've got my antenna up questioning on breaks just what's this market made out of. I feel better, though, when I look at meal because it's got the lower highs, lower lows, an outside day down. It did what I thought. It respected the resistance of the 100-day average on the way up. Now with this down move, as long as today's high is not taken out, either on Friday or Monday, the odds favor you either play around this number or you head to that lower Bollinger Band because the bias is down since you're under the 18-day average and momentum is down. I favor the market trying to work to lower prices. Doesn't mean that's what will happen. What would throw this pattern off? Taking out today's high. When you have an outside day down and you take out the high of that, one of my charting rules is that I then look to see if the prices are going to make a run to the upper Bollinger Band. So I think the bears have to defend this area if they want to keep the market in their way. The fact that soybean oil is going up while meal's going down and beans have stalled, well, that's often a sign that the soy complex isn't ready for a sustained move to the upside. It's held on to one already, but you're overbought. You're at the upper Bollinger Band. This is not an embedded reading. I think the market's hit upside targets. That does not mean to be bearish. It's just hit upside targets. In the corn market, you've had a pattern of lower highs. You've been under the 18-day average of closes. Markets having trouble getting down, even during harvest, to this 381.25, the lower Bollinger Band. Could be one of the reasons, as we keep seeing shopping lists coming out of China. Corn happens to be on that list, so are soybeans. So these markets, I think they're paying some attention to that, but the trend is down there. And in the wheat, you lost the embedded reading right here. When you lose that reading, it's often a sign that if it's not regained immediately, which it was not, that price and the 18-day average, or the closest of a moving average, are going to make a run. Now here's something that counters that in a small way. You had a bullish crossover where the 18 got over the 100, so it's cushioning that gravity pull on prices, as I want to call it, is maybe it gets into that. So I'd be a bit cautious here, but I do think the market's got a shot to make it back to those numbers. Obviously, the resistance, as I see it, is the 534 level. The trend is up, the bias is up, but you lost the embedded reading, and momentum is pointing down. In the sugar market, you have lower highs, lower lows. You keep hitting Bollinger Band, bouncing away. But this time around, the market is now trying to turn momentum to the upside. An idea that the market's run out of that downside oomph would be getting back over 1239. The problem is the 18-day average is waiting for you. If you can slice through that and this number, well, if the shorts were to bail, then you have resistance at this level. Right now, this market is saying oversold to hit downside targets, and the shorts don't seem to want to push it. In the coffee market, remember I was saying on the wheat, I'm looking for the break? Well, here's the opposite. You have an embedded reading, you lose it in coffee. That means I'm looking for price in the 18-day average to try to make a run at each other. They certainly did the next day, and then they got through it. So now the market's doing what? It's pulling back to that line in the sand, as I like to refer to it, but the trend is up. Is you got higher lows, higher highs. The bias is down because you closed under the 18-day average, and momentum is up. This market looks to me like it's trying to figure out what to do next. In the cocoa market, you're just slicing in between these Bollinger Bands without a trend. You have no follow through to the upside or the downside, a very difficult market. Cotton market's been in an uptrend for quite a while here, and now the market's starting to drift sideways at this point in an overbought condition. Be a little cautious. You know, you've got cotton harvest going on and so on. If you were to take out 63.96, get nervous, you might pull back into this range. At this point going home, overbought, bias up, trend up, but running out of momentum so far. In the cattle market, you've again hit the upper Bollinger Band and couldn't go anywhere from that. I think the pros are taking some money off the table. The trend is up, the bias is up, you have an embedded reading. Lose that red number, then I'll say maybe you get back to the 18-day average or lower. Right now, the bulls, they have the control, and as the market breaks, unless that red line breaks down with it, I think they'll continue to be a buyer. In the feeder cattle, the downside momentum has been lost. Now momentum's drifting sideways, support's back at the 18-day average. I would not be surprised, because you've got higher lows, higher highs, to see the bulls try to support the market there. They fail if you get under 138.65. That would break the pattern of higher highs, higher lows. At the same time, very important, if you took that out, you wouldn't get a downtrend. You'd have a higher high, lower low. So it's the bulls that are under pressure. And the bears have controlled the hog market, even with China saying they'll buy it. You can see how prices have come down. But you're into a support zone. You're oversold. The Bollinger Band, generally the first time you hit it, the pros are, I think, taking some money off the table. I spent the day today doing my stock index report. So I told you I'm going to try to do 1 to 2 reports. I realize this is an agriculture update, but I'll get to your ag report starting next week. I intend on doing 1 or 2 reports a week on a regular basis. Now, I have to tell you, the reports are really intensive. They're all video. They're not written. They're only available on our website under the word research, and they're there for 5 days. If you're not a subscriber of my research or have a trading account with us, you might want to consider it, because after the next 1 or 2 reports, for those of you that don't have one of those 2 elements with us, you're going to see you can't view them without a small fee. Everybody else, they're free to you, then they stay free as long as you have a funded account or you're a contributor to our research in some manner. It's how I pay for this room and do all this for you. In any case, go to our website to view it. It's free to everybody right now at www.iraepstein.com. Under research, you'll see I've dealt with seasonals, I've dealt with quarterly, monthly, weekly, daily, and price counts. So you got a really big report in there. It's not a short one. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.